There is a saying that first master your mind before mastering the market. That means before focusing on strategies, you have to focus on your mind. In trading, more than strategies, trading psychology is important. So that is why in today's video, I am going to discuss 10 important rules to master your trading psychology. And the rules which I am going to discuss now, which I personally used in my trading life, and after using these rules, I have seen change in my trading. And now the first rule is monitor your emotion before taking the trade. So that means assume that 9:15 market opens, and before market opens you had big fight with your wife, or you had a big fight with your boss, or you had a big party last night, and morning when you woke up you had a very bad hangover. So that means you are mentally disturbed. In such time it is better not to take the trade. So if you want to take the good trade, then first you have to be mentally calm. So that is why in my trading also, when I am disturbed for any reason, such days I totally quit trading, because I know that that day is going to be a bad day for me. And now the next one is don't get married to your trade. So that means you have taken a trade and it's going against your direction, and that trade currently going in loss, but still you are holding on to trade thinking that it will reverse, but that will never happen. That means don't get too much attached to your trades, because it's not marriage, it is trading. If that trade is not working, just cut it off, move on, and wait for the next trade. Next one is remind yourself you are in trading to make money, not to be right. Trading is not about being right, trading is about making money. So don't go after satisfying your ego for being right, because market don't care about your opinion. So if your trade is going wrong, then remind yourself you are here to make money, not to win the argument with the market. And the next one is market doesn't care who you are. Whether you are a CEO of a company, whether you are a MD of a company, whatever you have a degree, market doesn't care about that. Market only respect those people who trade with discipline. If you have an MBA in finance from Harvard University or Cambridge University, don't think that you are going to be a successful trader, because market doesn't care about your degree. Market only respect people who trade with a plan, who trade with a discipline. And if you are indisciplined, then market will teach you in a hard way. Next one is trade what you see, not what you think. That means assume that price is coming near the resistance, then don't go and just take the short position because it came to the resistance and you think that it is going to reverse. It doesn't work like that. You have to wait for the price action. That means see if there is any bearish price action or any bearish candles are forming near the resistance, then you have to trade, not just before that because you think it is going to reverse. Trade what you see, not what you think. So that means you have to trade what you see on the chart. Revenge trading means you are donating your money to the broker. Assume that you have taken a trade and you lost that trade. Immediately you take another trade, you lost that trade also. Then you keep taking that trade to recover your losses of part trades, and only it leads to overtrading. And such days you ask yourself, you must have made big losses the day when you have made revenge trading. Because when you are taking a revenge trades, you don't trade with logic. You just take impulsive trades. There's no logic, there's no price action, right? Just revenge in your mind, and most of the days, such days leads to big losing days. So that is why remind yourself when you take a revengeful trade, you are donating your money to your broker, because whether you make money or you don't make money, your broker will make money, because every time when you buy or sell, you have to pay the brokerage. Next one, remember in trading, survival is first, profit is next. This is more applicable for new traders, because experienced trader must have already experienced, because new traders when they come to market, the only thing in their mind is making profit. But for a new trader, your goal always should be protecting your capital by keeping stop loss. And traders who survives here by protecting their capital, they will stay here for very long time and they grow with it. And that is how successful traders, they last for decades. Next is day trader doesn't mean you have to trade every day. Remember, you are not into 9 to 6 job. Just like how 9 to 6 job, you are under obligation to go to office every day. But in trading, there is no obligation. No one is keeping the gun on your head to trade every day. So that is why day trader doesn't mean you have to trade every day. Trade only when you see the high probability setups. Next one is losing streak is the part of trading and you have to accept it. Just like how you go through winning streak sometime, you can go through losing streak also. So when you go through the losing streak, don't start doubting about your strategies. Remind yourself that it is part of trading. So don't jump from strategy to strategy thinking that your strategy stopped working. It is part of trade. Detach yourself from previous trade. This normally happens when you had a big loss in your previous trade or in previous day. Because of the big loss in the previous trade, next trade you are very scared because still your previous loss in your mind, and such time you don't follow risk reward. You cut your profit too early or you take a bigger position to cover your previous loss, and it can only lead to disaster. If really it is affecting you, then my best suggestion is take 1 week break and come back after 1 week. By that time, you must have forgotten your past trades. Next one, don't take the trade based on social media. Assume that you have taken a long trade in Nifty. After doing the proper analysis, you have taken a long trade near the support, and as per your analysis, Nifty started going up and already you are in some profit. And suddenly you went to Twitter and there is a big financial guru who said, I am short on Nifty because of the blah blah reason, and now you are confused because as per your analysis it's a long trade, but that finance guru on Twitter, maybe he has millions of followers and you think that maybe he is right because he has such a big followers. I should not hold on to my position because market may crash, and you cut your winning trade making a small profit only to see at the end of the day Nifty made a big rally, and you start repenting thinking that had you hold on to your trade that day you would have made a very big profit. For example, this is the Bank Nifty chart, and 17th April morning you are looking at the 16th April chart, and you have realized that Bank Nifty made a small consolidation at the late afternoon, and you think that next day if this consolidation high breaks, then there is a good long opportunity, and you waited for market to open, and 9:15 market opened with a big bullish candle. And you know that being a price action trader, this is a very bullish sign. You took a long trade here on this candle and you kept your stop loss below the candle, and after that trade started going in your direction, and after that suddenly some finance guru came on Twitter and he started mentioning that RSI made a overbought zone and it's a bearish sign, and you think that since he is a very big trader with a lot of followers, whatever he said is right, and you also start seeing some bearish candle. You don't think that it's a pullback, you think that now market is going to crash because of that big finance guru, and you square off your position with a small profit. And what happens after that? After that you booked your profit, market started going up and up and up, and you missed the opportunity to make this much profit. As per your price action analysis, you thought it's a breakout from the previous day high and it's going to make a trending day, but because of some finance guru you have squared off your position here only, making a small profit, and you missed this much rally. So that is what happens when you focus on social media tips rather than your own analysis. So that is why don't get distracted by social media. Don't watch social media during the trading hours, and trade with your plan, not with someone's plan. Because social media is only for entertainment. However big trader is, no one can be right every time in trading. So these are the 10 important lessons which I personally followed in my trading, and it helped me to become a better trader. So that is why write it down all this, post it on your computer screen or put it in a post-it note, and before market opens at 9:15 keep reading all this, and most importantly you have to follow it. So let me know how did you find this trading psychology video, and you think that if I missed any important rule, then put it in the comment section and let me know. And if you want to learn more about day trading, swing trading, scalping, you can check my courses which I have given below this video in the description section. And just to remind you, our swing trading course we have updated now with 15 swing trading strategies, and this is based on smart money concept with many new modules we have included along with the volume profile analysis. And if you are interested, you can check this new updated swing trading course in our website. That's all from my side, and I'll see you soon with a new video. Until then, bye and take care.